Welcome to the deep dive. We're here to cut through the market noise fast. Today is Friday, August 22nd, 2025, and our mission is really to unpack the global financial markets. We're zeroing in on the big one, Jackson Hole, the economic symposium there, but also critically some other catalysts that maybe aren't getting as much attention but are, quietly shaping things. Right now it feels like the entire market is just holding its breath for one speech.
Yeah, absolutely. It really does. Federal Reserve Chair Jerome Powell is, well, he's walking a tightrope. Every single eye's on his address today. He's got to navigate this sticky inflation on one side, and then a labor market that's clearly starting to soften on the other. That's the core tension, isn't it? And frankly, the market is just desperate for clarity. Clarity it might not get.
Okay, let's dig into that. This Powell pivot point. It sounds like a real head scratcher. Someone called it Goldilocks with two bears and a bull, which, paints a picture. You've got U.S. initial jobless claims hitting their highest since late 2021. That seems like an easing signal, right? But then the S&P Global U.S. Composite PMI that just surged, highest this year, manufacturing's rebounding. How does the Fed even weigh these completely opposing signals? What does it mean for, say, September?
Look, it's a huge challenge. No easy answer there. And you see it in the market expectations, right? For a September rate cut, they've swung wildly. We went from almost certainty, like 98%, down to maybe 70, 83% probability now. That creates anxiety. So the highest probability outcome. Honestly, Powell doubles down on data dependency. He offers no really decisive signal either way. And that ambiguity, that could easily trigger a sell the news kind of reaction. The market just gets tired of waiting.
Right, okay. So the U.S. is kind of stuck waiting. What about globally? You mentioned a tale of two tapes.
It's fascinating. While U.S. equity futures are trying, just barely, to eke out some gains after 5 down days for the S&P. You look over at China. Chinese equities are staging this incredibly powerful rally. Shanghai Composite up 1.5% to a decade high. It almost seems immune to all this global anxiety. It looks like it's fueled by domestic money, maybe some AI speculation too.
Immune. But isn't that happening despite some, pretty worrying economic signs coming out of China itself?
Precisely. That's the key point. This rally is happening even with really troubling macro data, specifically foreign direct investment, FDI, into China, down 13.4% year-on-year for January to July. That's significant. So you connect the dots. It suggests this is maybe a fragile speculative rally driven by local capital while foreign capital is actually heading for the exits. Meanwhile, Europe opened cautiously. India saw some profit-taking. Japan was subdued. It's a mixed bag elsewhere.
A fragile foundation indeed. And back home in the U.S., are there other cracks showing beyond just this waiting game for Powell?
Oh, definitely. If you look at the technicals, they've weakened. The NASDAQ, the NYSE Composite, they've actually broken below their rising trend channels. That's not a great sign. The S&P 500 settled below its 20-day moving average, around 6,380. And market breadth, it's poor. Less than a third of S&P stocks are actually outperforming the index itself. That screams top-heavy market. Too reliant on those few mega-cap tech giants. And those are the stocks most vulnerable if Powell does sound hawkish.
And the VIX, the volatility index, I saw it creeping up. But you mentioned something about its future structure, contango. What does that tell us?
Yeah, the VIX is ticking up, but slowly. The contango in the futures curve. Well, it basically means the market expects more volatility further out, not right now. So there's a degree of complacency, perhaps, a sort of calm before a potential storm. And that creates vulnerability. If Powell does surprise with a hawkish tone, you could get a sudden volatility shock, a scramble to hedge.
Okay, so beyond the immediate Powell focus, there's more going on. Let's pivot, like you said, to some of these other critical, maybe quieter catalysts. Corporate geopolitical.
Right. On the M&A front, there's a big energy deal. Snow is acquiring Meg Energy, about $7.9 billion. But the real aha moment here, I think, is buried in the details. They're in advanced talks for indigenous groups to take a $2 billion equity stake. This is huge. It's transforming M&A in Canadian resources. It's about strategic risk management, securing that social license to operate, a potential new template.
That really is innovative. And internationally, the U.S.-EU trade pact that just got finalized.
Massive.
Yeah.
Absolutely massive. It solidifies this strategic economic bloc, clearly positioned relative to China. And the commitments are substantial. We're talking $750 billion in EU purchases U.S. energy, $600 billion in EU investment into U.S. sectors like semis by 2028. It's basically like a stimulus package for key U.S. industries, just not done through legislation.
Interesting. And speaking of China, they're making a big geopolitical play themselves, aren't they, in Afghanistan?
Yeah, a very high-stakes one. Pushing to extend the China-Pakistan economic corridor into Afghanistan. Why? Access. access to an estimated $1 trillion in mineral resources, especially lithium, which is critical for green tech, batteries. It's a major gamble for global supply chains.
But fraught with risk, surely. Security risks, groups like ISKP.
Absolutely fraught with risk, huge security challenges, but potentially huge rewards for China if they can pull it off. And quickly on earnings, Walmart actually missed on EPS, their earnings per share, even though revenue was strong, so cost pressures are biting. Canadian Solar also missed profit forecasts, citing tariffs. Global trade frictions still playing out there. BJ's Wholesale reports today, so keep an eye on that.
Okay, bringing it all together. What does this mean for you, watching all this unfold? The immediate focus, yes, it's Powell. 3 scenarios, really. A dovish surprise, maybe a risk-on rally, hawkish reality likely extends the sell-off. Or, the most probable, that neutral punt, continued ambiguity, which probably means initial chop, then maybe drifting negative for risk assets because, well, uncertainty persists.
Exactly. But maybe here's the final thought to leave you with. Well, everyone's fixated on Powell today. Remember these other structural shifts we talked about. That innovative indigenous partnership in Canada, the huge U.S.-EU economic bloc forming, China's resource gambit. These are creating deep currents, multi-year trends. They'll shape the economic landscape long after the noise from Jackson Hole fades. So the question for you is, what enduring trends are you tracking beyond just the daily headlines? How will they shape your long-term view?